Hi, my name is Amar, and welcome back to Conversations with Kyle. Kyle is a CPA, and today we're going to talk about capital gains and year-end tax distributions. But before we get started, Kyle, did you survive this tax season?
I'm still standing, so I'm still here and still serving clients and still at it. Yeah, I got a little hectic there before April 18th with the run up there, but just now I have more time this time of year to do things like this and talk strategy and planning and some of the true value add services that we can provide. So just because it's tax season doesn't mean I'm not busy, but
Yeah,
yeah.
yeah, exactly. Like, what does Kyle do after taxes? No, just kidding.
Yeah,
Did
quite
you
yeah. More than
Did
you
you
know.
take a vacation just out of curiosity after tax season? I know a lot of CPAs like the week after just like try to unplug from the computer. Were you able to do
Yeah, I
that?
was going about 50% the last
Oh,
week or so.
there you
I
go.
wasn't doing 40 hours a week, but still need to do a little something and clean up and do some invoices and yeah, a bunch of stuff. But
You
yeah, been able
definitely,
to unwind a little bit.
yeah. All right. So today's conversation is really going to be about at the end of this year. So the end of 2022, beginning of 2023, you start to get tax documents. And I feel that clients may be in a position where they look at their statements and they see losses, and then they look at their tax documents and they're going to see, wait a minute, is that a capital gain I have to pay on? And this happens time and time again. It can happen with mutual funds, exchange traded funds, stocks, and before clients get this type of surprise, or individuals out there get this type of surprise, thought we put a video together, right, Kyle, to kind of go over this. So what's happening here?
So yeah, I think the topic you want to discuss the most was capital gain distributions and how that interacts with other capital gains and what can you do now to mitigate any gains at the end of the year. So I'd say the number one culprit is definitely mutual funds and some exchange funds, like you mentioned, that will spit out these capital gain distributions at the end of the year, really irrespective of some of the performance during that year. Yes, when it performs well, you have more capital gains. But just because you're down 20, 30% of your portfolio doesn't mean all the capital gains are eliminated within the fund, right? So when they distribute money out to you, there will still be long-term capital gains associated with that distribution. But what you can do, if you have other losses within your portfolio, you can sell maybe some stocks that are going to produce a loss that are going to offset that potential gain at the end of the year. So just because you do get a capital gain from these, mostly like I said, mutual funds, doesn't mean there's nothing you can do about it. So
Yeah. So let's step back a little and kind of paint a picture of how this actually happened. So maybe I can chime in with, let's say, a mutual fund. Mutual funds are not started the day that you invest in it. They're started a long time ago, and they buy all these investments that are in there for the last several years. Then you buy into the mutual fund, and then you fast forward a year or two, and now we're at the point where the mutual fund needs to create liquidity. So it's going to sell investments. Those investments, they could have been bought, 2 years ago, 3 years ago, 5 years ago, depending on the type of fund. Specifically bond funds typically have sold things that they've held for a really long time, not because they wanted to, but those are the things that you can sell in an environment where everything is going down. You can only sell your good quality investments. And with bonds that were purchased 10, 15 years ago, offer a higher interest rate than what's available today. So they sell those investments. Bonds as a whole, as interest rates go up, go down, so that mutual fund's still going down in value, but it's still sold that one investment for a gain, right? And it's selling multiple individual holdings through that course of time. And so at the end of the year, it's going to show a capital gain distribution because it had to sell some of those underlying holdings. But at the end of the year, your share value may be less than what you originally bought it for, right? And so there's two layers that you have to be cognizant of: is the purchase price that you paid and what you're selling at, and what's going on within the mutual fund. And that's why exchange traded funds and stocks are way more tax efficient because you have a little bit more. I don't want to say control, but you have better visibility in terms of what's happening,
It's more tax
and
efficient and fair to
yeah,
the shareholder or
yeah,
purchaser.
exactly. And
But yeah, I'm not anti mutual funds at all.
yeah,
But yeah, there are different tax impacts from holding these types of investments, and working with somebody like Amar and talking about what type of investments are within these underlying funds, what can you expect in terms of capital gain distributions, how do you mitigate that going forward? Those are all things Amar and I work through, and yeah, should be helpful for our clients. So.
yeah. So it's very realistic. And let's just take this year, for example. If you thought investments were going up and so you wanted to sell, and have that gain, and then, let's just say the Fed screws everything up and investments go down. At the end of the year, you could have a loss for this year, but also have a capital gain. And it was good that you got that capital gain because you took some profits off the table. You probably re-diversified or rebalanced. And like Kyle said, this is not just in mutual funds, but this can happen even in private equity investments where they have a K1 distribution, or it can happen to, all different investments out there. We're not trying to pick on mutual funds, but this is something important to remember. So we thought we put it out there now, and we'll probably revisit this topic around November, December, so that there's no surprises come April. What's it going to be next year? Do you know? Is it 15th of
I
April?
just put April 15th. I haven't thought that far yet.
All right, this is a good one. If you have questions or comments, please leave it below. Otherwise, we'll talk to you later. Thank you.
All right, Amar. Take care.